Imagine waking up to find the stock market soaring, all based on one deal that happened over the weekend. But this deal is temporary and only lasts for 90 days, forcing the question, do you add to stocks? Do you trim some profits? By the end of this video, you'll have context of this big deal so you can make a better, more informed decision. You will also find out which key technical indicator the market just blew past. Stay tuned. Now, let's rewind a little bit. Not long ago, the US and China were slugging it out over tariffs, with the US at 145% tariffs and China at 125%. Trade was basically frozen and the global supply chain was put into a tangled mess. But after some intense back and forth negotiations over the weekend, they hit the reset button. US tariffs were cut down to 30% and China all the way down to 10%. This sent markets off to the races as investors brace the good news. So why did the market rally off of this in the first place? First off, companies that import goods from China, think retailers, electronic makers, auto suppliers, now have a short-term reprieve of tariffs eating away at their margins and driving up cost. Plus, lower input costs often translate to more consumer spending power. Therefore, the move isn't just about numbers on a chart, it's about real-world dollar savings that flow money to corporate bottom lines and customer wallets. Sounds perfect, right? Well, wait just a minute. As of right now, this tariff only lasts for 90 days. We still need to work our way through long-term negotiations and find agreements, plus resolve some underlying trade issues. But, and this is a big but, during these 90 days, China has also agreed to tear down any non-tariff trade barriers as well as help try to resolve the fentanyl crisis. Those are political wins that could help smooth future talks. Therefore, while tariffs have eased, the real peace treaty still hangs in the balance. So what does this mean for investors? This is a very bullish sign, as both this US-China 90-day trade agreement and the UK-US trade agreement from last week both show that trade negotiations are making great progress. So bullish, in fact, that the market actually just blew past its 200-day moving average, which is a key technical indicator showing the long-term trend within the market, therefore possibly signaling that this move could last. Now, Secretary Bessent, who negotiated this deal, noted that this was an important step in furthering negotiations and narrowing differences that should help boost cooperation. But while Bessent noted that he doesn't want a general decoupling from China, there are some strategic areas such as semiconductors and medicine where strategic decoupling does make sense. He noted learning through COVID that efficient supply chains do not mean secure supply chains, and we need to become self-reliant in these critical categories. And remember, this isn't just happening in isolation. There are many other trade deals currently in the works, but this one is just a pause and not a done deal. So drop a comment below if you think the US and China trade agreement will be longer term, or if you think we're going to hit a wall at the end of this 90-day mark. And as always, like and subscribe to stay informed.